Global, I'm your host Nick Toka. On today's show, Bitcoin rewards app folds, goes public, and begins trading on the Nasdaq. Also, Bitfinex Bitcoin long positions reach $5.1 billion. Is this someone buying or hedging? And feature story of today, Bitcoin reaching 100K is the start of a massive wave of institutional interest, says Samson. We're also going to go over some of the history of Bitcoin and the future of Bitcoin, and also we're going to elaborate on the halving cycles and how to interpret these things. All this and so much more in today's show. Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. Today is February 19th, 2025. And on today's show, we are going to continue on our theme of financial literacy. And we're going to go over today a bit of the history of Bitcoin and the future of Bitcoin. It's something that I think is very important for people to be aware of. And we're also going to cover the history of money and how it all came to this. Additionally, we're going to go over the Bitcoin halving cycles and how it has traditionally gone up and down in the cycle, so you can get a good guide of where you think it's going to go in 2025 and beyond. So let's jump right into it. Crypto, Bitcoin, started with a group of internet cryptography enthusiasts. In layman terms, a bunch of nerds that wanted to make things a little more secure. So when they looked at the current money system, they saw that things haven't really changed for, a few hundred years. Things were based on the fiat dollar. Then looking before that, gold was the standard. And the gold standard lasted for approximately 1,000 years, and it worked actually really well. Previous to that, many different things were used for currency exchange. Of course, everybody knows about bartering. That was probably the first means of exchange, and we're probably going back thousands of years for this. And certainly in places around the world, people are still bartering things, and they're still bartering even in North America and the modern world. There was a great show I was watching. It was called Barter Kings a few years ago. It's disappeared. It only had a couple of years of episodes, but effectively they would start with something. They'd find something in their garage. Oh, I'm going to start with a drill. So they would trade their drill for something else that somebody wanted their drill. They wanted something else that they thought was worth a little more. They'd trade for that. And their ultimate goal in each show was, I'm going to start with this, whatever it was, a typewriter, a drill, something that they had laying around the house. And their goal was, hey, this episode, I want to get trade up to a camper so I can bring the family camping. Something along these lines. Or I'm going to trade up to a car. I'm going to trade up to a motorcycle or an SUV. And basically they would make all these little trades. The first trade was, a drill. They would trade for something worth a little more. A computer, let's say. Then they trade the computer for, somebody really wanted their computer and they wanted something that they thought they could trade for, barter for. And they would trade up. Effectively, they would make about 7, 8, 10 trades per episode, and they would start with a small thing like a drill and end up with a big thing like a car. So it's not disappeared. It's still around. You've probably bartered with your neighbor. Hey, I have this that I don't need, and it looks like you have that you don't need. and you trade for it. I had some new neighbors here, and I noticed they had 3 bags of mulch, high quality, CIL, I think it was, the good stuff, sitting on their lawn for 2 years, new in bag. And I also noticed that they were new and they had all this garbage they needed to get rid of. And I said, oh, you know what? I have all these tags here, garbage tags. Anything over 2 bags, you actually have to pay, $1 per bag. I said, I've got a bunch of tags here, and I notice you have all those mulch bags there. I'll trade you. And without a moment's notice, they put those things on their back, and they were carrying them over. And we traded. So this stuff's still happening around the world. So going back, the earliest form, denominations of money was, in fact, trading. I'll trade you my sheep for your pig. I have 7 chickens for 1 goat, right? And this is going maybe even tens of thousands of years, right to the earliest part of civilization. After that, each part of the world had their own type of currency. In some of the South Pacific Islands, they were using stones for trade. In Africa, they were using beads as trade. In the Netherlands, there was the big tulip trade. So as things progressed, so did the types of things they were using for money. Now, the problem with all of these things that Bitcoin fixed was that the more you had of something, the less it was worth. So a great story, you guys should very much read the Bitcoin Standard. It's in the show notes. It's one of all the books I have there are free audiobooks, 100% free online. So the Bitcoin Standard has some great stories about traditional finance, traditional monies, and where it explains really well where they went wrong. So, for example, in the South Pacific, they were using stones, and they were rare stones, and they had to be mined. They weren't there from the local island. They had to go to a different island. They had to get these stones. They had to mine the stones. They had to shape the stones, bring back the stones to their island, and then they were using this. So the entire island laid these stones on the beach. And when you owned something, they would say, okay, this size stone, this stone here is your ownership, which gives you ownership of, 100 sheep, let's say. So if somebody was going to trade 50 sheep, they would then cut the stone in half, and then that stone was half, 50 sheep was owned by this half stone, 50 sheep was owned by that half stone. All is well, and things worked like that for a very, very long time. We're talking, I think it was 300 years or more. Worked out perfectly. They didn't have an issue. The system on that small island worked great with the stones. It was a means of money. Then what happened was a shipwrecked Scotsman, I believe the story goes, ended up on the island, and he noticed that the island was full of, I think it was coconuts, and he said, hey, can I trade coconuts? We need coconuts in Scotland, and can I trade you for money? And they didn't want anything to do with their money. They were like, this is useless for us. This is not money. Do you have stones? And he said, no, I don't have stones. So at the time, there was a certain number of stones, and that's all there ever was on this island. And again, to get more of these stones, they'd have to go laboriously to a different island, cut these stones, mine these stones, bring the stones back. and then they had a slight bit more money. So the Scotsmen, they didn't want his, gold or, whatever they were using. I think it was silver at the time. So what he did is he went back to Scotland. He then found, a more modern way of mining these stones. He went to the other island. He brought a crew. They mined tons of these, 1,000 of these stones, for example. They brought them over to the South Pacific Island and said, okay, here's the stones and we will trade you for your coconuts. Now, some of the islanders were ecstatic and they were ready and willing to get these guys stones and trade for the coconuts. But then others, some of the elders have said, no, these were not mined in traditional style. These were, done with machinery, and they basically brought in, maybe they had 50 stones before the Scotsman got there. Suddenly the Scotsman brings, 1,000 or more stones. So what ended up happening was, because of this huge influx of new rare stones, identical to what they had previously, it basically devalued their currency to nothing. Originally there was 50 stones, then they came in and brought 1,000 of these things. Well, suddenly there's this big debasement of the original currency. In Africa, they were trading in beads quite well for hundreds of years, and a similar thing happened. Somebody came in from Europe, I think it was from Spain, and they said, oh, I'd like to trade you for whatever it was, diamonds or whatever they wanted. And they said, no, we'll trade you, but, do you have beads? And they said, no, we don't have beads. They went back to the, first world, fabricated millions and millions and millions of beads, the same type as what they were using, went back to Africa, and basically bought up half the continent. And that actually started the term of blood beads, right? So they were working quite well with their bead system until the Europeans went in, and instead of them having 100,000 beads as a total supply for the entire continent, suddenly this guy comes in with 10 million beads of identical quality. And what happened, once again, is it made their currency, the beads, worthless because of this huge influx of new beads. Again, supply demand we're talking here, guys. The tulips in the Netherlands, there was, we all know that Holland, Netherlands has beautiful tulips. Well, way back in time, I think this is going into the, don't quote me on the date, but I believe it was between the 1300s and the 1700s. It might have been 18s. They started changing and I guess genetically modifying these tulips. So instead of there being, a red tulip and a white tulip, suddenly there were other very cool new types of tulips. So it got to a point where these were so sought after that they started to use them as currency. And once again, once this huge influx and manufacturing began of these tulips, then they weren't so rare anymore. There were now millions of these things, and the value of these things collapsed because first there were only a few, and suddenly there were millions of these things. Going into a more modern time, let's talk about money, cash, fiat, as it's called. And let's do a little demo with fiat. And this is a demo we're going to do. I've done it before, and this, in fact, can be used for any type of debasement, for any type of currency, and in fact, any product. Let's flip you into my screen. So here we just have a blank page, and what we're going to do is we are going to draw, for example, we're going to talk about fiat money. Okay, we'll call it the US dollar. But we could use, in its place, we could call it tulip bulbs, we could call it stones, we could call it beads. So right now, this is the total number of dollars in the US, or beads in Africa, or tulip bulbs, or stones in the South Pacific. You, or I, or anybody, own this many. Okay? So that's our cut of the pie. Okay, the total supply left and right. Our cut, this is what we own, the vertical line. Now, it's a substantial amount if you look at it. It's, we'll call it for argument's sakes, 1/100th of the total supply. I know it's probably more like 1/10, but let's call it 1/100th of the total supply. So then in comes the European, or in comes the tulip master, and all of a sudden there is this huge influx of new stones, new tulip bulbs, new beads, or new fiat money, dollars. So now there's this many dollars. Okay, and over years, with the money printing, this is exactly what's happening. So before, you had this small little sliver over here, and that was the total money supply. And you had your cut of the pie, which we called about 1%. But then they printed, billions and billions and billions, trillions, in fact, of new dollars. They brought in millions of new beads. They brought in millions of thousands of new stones. They brought in millions and perhaps billions of new tulip bulbs. And all of a sudden, what you had as your nice, 1% of the total money supply suddenly has become 0.001 of the money supply. I mean, if we add a grid here, I guess the grid is already there. So this is a good example of money debasement. And this is a great example of what's been happening through history, and it's a great example of what's currently happening with the fiat system, the dollar as we know it, the peso, the yen, the euro, you name it, every currency around the world. The more they print, the less you own. So then came along these, nerd cryptographers in 2010, we'll call it. And they knew that there was a problem with currency all around the world. They knew that there was this money debasement all around the world, and they wanted to do something about it. So what they started to do was to think about and create a new type of money system that wasn't based on something that could be altered. So they came up with Bitcoin, the first cryptocurrency. So with Bitcoin, there can only be a certain number ever created. And no more than that number can ever be created. In Bitcoin's case, it's 21 million. That is the maximum total supply, and no more can ever be created than 21 million. So what does that do? Instead of money debasing, like our example, if you owned 1/100th, well, you will always own 1/100th. So your value, in fact, will go up in time rather than down. The more lucrative it becomes, the more people that want it, the higher the price is going to go. So, and it's truly based on the elasticity of the product. The more supply there is, the higher the price is, the less it's worth. The lower the supply, the more something is worth. So in Bitcoin's case, 21 million, right? What we missed was gold. Gold lasted for 1,000 years as gold was basically your savings, and then you were using silver. Originally, it was just gold back in Egyptian time, I believe. Then it was deemed, there wasn't enough gold, so they started using silver as basically fractions of gold, right? And if you can still to this day have this ratio, and the historical ratio is 50-1, so 50 silver ounces equals 1 gold ounce, and that's the historical ratio. So then they went one further and made, half ounces and quarter ounces and tenth of ounces. And of course, originally they would just cut them in half, right? I'm selling you a pig, and the pig costs 1 gold ounce, half a gold ounce. So they would literally cut the gold ounce in half, and here you go, you bought your pig. So that lasted for 1,000 years, and it was actually an excellent way of keeping value. And the reason it held its value is because there's only a small amount of gold that's found and mined every year. So, in fact, only once in recorded history anyway, was modern history, was more than 2% of gold found in 1 year. So every year there's basically 1 or 2% more gold found, and no more than that. So because of this supply constraint, it holds its value. Then came Bitcoin, where there isn't a relative finite supply. There is a 100% secure finite supply. So not relative, but instead just a finite, limited supply. Again, it's all supply and demand. The more the price of something, the less of something that there is, the more it's going to be worth. We talked on the other episode about fine art, fine wine. You can certainly come, hockey cards, baseball cards. Babe Ruth worth millions, Gretzky worth millions. Why? Because there's only a few left. So this goes to all items, including money and fiat currency. Right now we're at the point where more and more and more money gets printed all the time, getting into the trillions and trillions, and the money debasement, as I showed in my little rudimentary drawing, continues. So your money is actually worth less every year. A dollar is losing about, it's been predicted, estimated at between 9 and 11% a year due to money printing and money debasement. So if your money's sitting in the bank and you've got $1,000, well, in 10 years, it's only going to be worth $100. And in 20 years, it's going to be worth $10. So this is in terms of its buying power. That's why, a lot of us remember when we were kids, you could get a pack of gum for 5 cents, 10 cents, 15 cents, a pack of chips. And now it's, $2 for the same bag, $3 for the same, chocolate bar or pack of gum. So this is how the value of money goes down, and this is also why Bitcoin and the advent of Bitcoin was so important. So these cryptographers created Bitcoin, which is basically a computer algorithm that is encrypted and keeps to a, it's basically, we'll call it a very secure password that keeps your information secure, because in order to make any kind of transaction, there's your half of the transaction, and then the other half of the transaction comes from the blockchain, which is basically a ledger. Think about an accounting ledger. So you make a transaction, and your transaction then automatically gets recorded on the blockchain, the ledger. And every transaction that's ever been done is recorded on this ledger. So it's there for everyone to see. If they really wanted to find the transaction, they could. So how does this happen? How does it work? There's basically things called Bitcoin nodes, okay? And a node is basically a computer with this software on it that creates this node software. All these node computers, and it's anything. Nobody gets paid for doing this. You can have a node on your computer, right? And you can actually buy and sell Bitcoin right from your computer. You can have your own node. You can buy and sell right there. I believe the fees are a little high, but it's definitely doable. And you can have a node. So every 10 minutes, all of these nodes around the world synchronize, and they all have the exact same information, and that is the blockchain. So they all have basically an entire copy of the blockchain on their computers. So if one computer goes down, it doesn't matter, because there's another, 50,000 or a million other nodes around the world. So this is why Bitcoin, you would think, is never going to fail, because it would really take all these millions of computers to go down at the same time. And even if they did go down, okay, power outage, the whole world's down, internet's down. Well, when things get back online, they're just going to resynchronize again, and the network is back up. So it's almost impossible to break. Of course, if it gets to the point where, all hell breaks loose and there's a nuclear war, or, asteroid hitting Earth, and it gets to the point where there's nobody left, well, it would then be to the point where no one even cares about any kind of currency, including Bitcoin. But for now, it's very safe because it's on the nodes. Now, how does a Bitcoin get created? Every time there's a transaction, the transaction needs to be approved. So it goes out to the Bitcoin miners, which are completely different from these nodes, right? So it goes out to a Bitcoin miner. It used to be that, people would mine on their computers. Gamers realized that some of the best mining hardware were video cards, NVIDIA video cards. And then it turned out that there was a better way, and then came out through mainly China, these ASIC miners. And ASIC is basically, ASIC, right? Everybody's seen a microchip. So basically it's a little square microchip, an ASIC chip. It does all the calculations. So these Bitcoin miners, what they've got are their boxes about, yay big. We're talking about, 2 feet by 1.5 feet wide. And in there, they don't just have one ASIC chip. They've got, 256 of these things. So combined together, these 256 chips, or 512, or thousands of these chips, these ASIC chips, all in one miner, do a far better job of mining than the video cards did. So all the big companies, the big mining companies in the world, are all using ASIC miners. They're not video cards. You can still certainly mine with your video card at home. And I mean, I still do it. And, I still mine. You get a little bit of money, and it's better than nothing, right? I'm an IT guy. And when I found out years ago that I could actually make money from my computer sitting at home, without doing anything, damn straight I went onto it, right? So the security behind it are the nodes. The creation of the Bitcoins are through every transaction. The miners basically do the actual transaction, the cryptography, the security behind it. They secure the transaction. They complete the transaction, and then they send the information for that transaction to the blockchain. And this is how they get paid. They get paid for their transactional power. So I think that is a good understanding of both money historically, the shortcomings of historical money, and the fix that Bitcoin has come up with. Now, if there's any questions, please do feel free to shoot me up a comment. I also want to add that I had a couple comments about Satoshis, asking about, hey, they specifically said they have some friends that they keep saying, hey, it's too late for me to get into Bitcoin, the price is too high. And they asked, could you elaborate a little bit about Satoshis, because they're telling me one Bitcoin is almost 100 grand, but in essence, if you break it down into Satoshis, it's not worth much at all. Now, I go over the price of Satoshis every day, and we will again as usual, but what you need to know is one Bitcoin is worth 100 million Satoshis. So it can be broken down into 100 million. So if you want to get into Bitcoin, you don't have to buy a Bitcoin. You don't have to spend $100,000 on a Bitcoin. You could spend $10 and you'll get, I think it's about 1,025 Satoshis per US dollar. So, $5, you'll get 6,000 Satoshis, for example. So if you look at it that way, it's still not too late to buy into Bitcoin. And if you're going to do it, buy the dip is certainly one good way to do it. Another good way to do it is dollar cost average, the same way you would with the traditional financial markets. Alternatively, you can look at things that hold value, but are lower priced, that you think might have more potential. XRP is one that I would look at, because we're still talking about a price of, I think, about $2.75, and it is, I think, third or fourth overall in terms of market cap. So it's not going anywhere. Solana, another one, I think it's around $170. And again, fourth or fifth in terms of market cap, and it's not going anywhere. So you can look at those if you feel like you missed the boat. Ethereum, there's just the problem with Ethereum is there's an unlimited supply. It's not limited at all. It is truly unlimited. So when you're looking at that, I'm just completely turned off. I just gave you the history of money and the way that the more supply, the less it's worth. And then here's Ethereum with an unlimited supply. It's literally written unlimited supply. So for me, I would stay away. But remember, 100 million Satoshis equals one Bitcoin. Buy some Satoshis. Basically, what you'd be doing is you'd be buying 0.0001 of a Bitcoin or something along those lines. And you can start with as little as $10. If you want to get into it, dollar cost average, you only want to put $10 to put $10 a month. If you can afford 100, put 100 a month. I would highly recommend something like that. And if you feel like the price is still too high, XRP is probably a very good bet on pumping. There is a possibility that instead of them using Bitcoin as a currency, because these blocks are, the transactions are posted to the blockchain every 10 minutes. It's actually not a fast system. XRP, on the other hand, is an extremely fast system. So they could be using something like that as a digital currency. There's a lot of speculation about that. I know European leaders have been pushing this XRP narrative more than Bitcoin. Now, to say that Bitcoin will disappear is incorrect. Bitcoin will be a reserve currency. So you would pay in XRP, but at the end of the day, the bank would get all their money in Bitcoin, for example. Let's get right into our Bitcoin technical analysis and move on with the show here. So we've got Bitcoin pumping a bit, about 1.5% right now at 97,000. We have Ethereum at up 2%, 27.40. Solana up 3%, $172. XRP up 6%, $2.70. Doge up $1.19. 1.19% to 25 cents. Sheeb up 2%, but still, 0.000016, 4016, so way down. Let's go into our crypto bubbles and check out and give ourselves a better perspective on how things look. So we've got IP up 36% today, TEL up 23%, TAO up 19%, APT up 17.5%, Bera up 15%, and we're looking at about 80 to 90, about 90% of things in the green for today. If we zoom out to the weekly, it's about the opposite, 80% red, 20% green, TEL up 55%, Bera up 20%, IP up 12%. And zooming out to the monthly, we have over 90% in the red, including Trump minus 52%. The only things up are Ultima 120%, OM up 112%, TEL up 80%, S, Sonic up 40%. Let's go into our crypto market cap. And this is what I was mentioning before. The current Bitcoin market cap is $1.9 trillion. Ethereum's at $330 billion. XRP is $156 billion. These are not going away. You hear all this meme coin talk. These are not meme coins. Now, having said that, there is Bitcoin, and then there are cryptocurrencies. Everything except Bitcoin is considered a cryptocurrency. Bitcoin is considered a commodity. In fact, it's been challenged in court, and the SEC considers it a commodity. Going down the list, Solana at $84 billion. Again, it's not going anywhere. It's not like a $2 million market cap. It's $84 billion. There's a lot of money in these things. Doge, $38 billion. Cardano, $27 billion. Tron, $21 billion. The total market cap for all crypto, including Bitcoin, is $3.15 trillion. Bitcoin holds 61% of the market dominance. Ethereum holds 10.5%. XRP 5%, and BNB coin, which is the Binance coin, just under 3%. There is something called a crypto fear and greed index, and every day they come out with once a day. They come out with what the actual reading is for the day. Today is a 49 in neutral. Yesterday was a 44 in neutral, and last week was a 50. And I mentioned yesterday that whenever I see these kind of numbers at 44, it's almost inevitable that the next day Bitcoin pumps, and we see that that's actually what happened. I bought the dip yesterday. There are approximately 1,150 days left until the next Bitcoin halving. There is 165,467 blocks until the halving. And until the end of all Bitcoin mining in the year 2140, there's 1,173,335 Bitcoin left to mine. If we go into the total assets by market cap for all companies, including commodities, we have gold at just under $20 trillion, Apple at $3.7 trillion, Nvidia $3.4 trillion, Microsoft $3 trillion, Amazon $2.4 trillion, Google $2.2, Bitcoin $1.927 trillion at number 7 overall, silver $1.87 trillion, Saudi Aramco, the world's biggest oil provider, $1.784 trillion. Meta, Facebook, $1.783 trillion, right behind Saudi Aramco. Tesla, $1.15 trillion. And this is what we were talking about before, Satoshis. So you can currently get 1,030 Satoshis for one fiat US dollar. And let's check out the US national debt. The current debt is exactly $36,501 billion. So 36.5 trillion, a lot of money, and the money printer continues to print, and the U.S. debt continues to climb. As we see, that equals 107,252 per U.S. citizen and 323,047 per U.S. taxpayer. Huge debt, huge amount of money owing. And you hope that the U.S. government never comes and says, well, we're going to have to pay off our debt, because where they're going to come for the money, they're going to be asking all the citizens for the money. And this isn't going to happen, because there'd be literally riots in the street if this kind of thing happened, because the taxpayer had very little say in where this money was spent. Sure, they voted for the president, but then all hands off deck at that point. The ministers basically came up with all the spending. And as we're seeing with the Department of Government Efficiency, Doge, they're finding all this BS that the money's been spent on, everybody's tax money. So it's actually embarrassing, and I'm happy to see this Doge Musk team here, because they're going through and they're basically saying enough is enough. You know, him and Trump are saying enough is enough. The taxpayers deserve better. Stop throwing money away for things that the taxpayer wouldn't want. If you ask them if they wanted to spend $500 million on some foreign something, they're going to say no. We have our own problems here in our own country. Like, let's fix our own country first before we start spending money overseas on things like war. And I can't tell you, there's a million things. If you listen to these interviews with Trump and the findings from Doge, you can see exactly where the money is. There was a good one I heard the other day where the pension plan is also a bit of a problem, because there's people being paid still that are over 300 years old. So what does that mean? It means it's bullcrap. There's nobody 300 years old, but they've been getting their pension for 300 years. So where is this money going exactly? So they're finding a lot of efficiencies, and I hope they continue to do so. There on the Bitcoin front, we have also an efficiency, a very smart money, and a lot of companies are starting to understand that. There is Appfold, starts a Bitcoin reward program, and it went public and begins trading on the Nasdaq. Bitcoin reward company Fold began trading on the Nasdaq Wednesday under the ticker FLD, with shares rising after the start. No kidding. Bitcoin financial services company Fold began trading publicly on the Nasdaq Composite on Wednesday, joining a small group of crypto-focused companies that are selling shares on U.S. major stock exchanges. The firm, which rewards customers with Bitcoin and has a debit card, began trading under the name Fold Holdings Inc. at $10.25 per share before climbing to over $12 at the time of writing. Yeah, no kidding. We are excited to list on the Nasdaq and look forward to continuing our mission to expand access to Bitcoin rewards and financial services as a public company, Fold CEO Will Reeves said in a press release. Well, good on them. Not exactly sure what they do. Let's get into this a little further. Fold last year teamed up with Visa to release its reward debit card, and now a credit card is also in the works, according to this website, which will let clients spend US dollar on credit and stack sats. So they're giving you Satoshis for spending fiat money. That is a good initiative. Other Bitcoin-focused companies trading on the Nasdaq include American miners such as Riot and software companies such as MicroStrategy, which is rebranded as a Bitcoin treasury company. So this looks like a great initiative. Instead of getting aeroplanes or things that you probably don't use, Fold teamed up with Visa, and with their card, when you buy stuff on your credit card, it looks like you'll get some Satoshis instead of points, which is amazing. Our next story goes into another Bitcoin positive story, looking at the future price of Bitcoin. And Bitfinex Bitcoin long positions reach $5.1 billion. And the question is someone buying or hedging? Analysts speculate that Bitcoin bull run is ready to resume after Bitfinex longs soar to $5.1 billion. Are they mistaken? So a long position means they're betting that the price is going to go up. A short position would be betting that the price is going to go down. So all of a sudden on Bitfinex, the long positions put $5.1 billion in there. So they're betting the price is going to go up. Bitcoin leveraged long bull positions on Bitfinex have soared to an impressive $5.1 billion on February 19th. This sharp increase has led to speculation that whales are setting up for a bull run. The mystery around this bullish move deepens since Bitcoin's price has remained steady near 96,000 since February 5th. Traders are asking if this points to a bull run ahead, and I would suggest yes, it is. Historically, Bitfinex traders are known for quickly opening or closing 100 million Bitcoin margin positions. This suggests whales and large arbitrage desks are active in the market. Currently, Bitfinex's Bitcoin margin has reached 54,595 BTC, the highest level in almost 3 months. This rise is largely driven by the low 0.44 annual interest rate offered on the platform. So that is definitely a positive for the biddy. Whales are putting huge amounts of money betting that the price is going to go up, and I believe the price will go up. We're nowhere near the halving cycle peak, which generally happens the year after the halving, and typically toward the end of the year. I can show you quickly in a chart here. I'm running a little long on today's episode, but we see here that I've got the vertical lines on the Bitcoin halving dates. Vertical line, the 2012 halving, the 2016 halving, the 2020 halving, and the most recent 2024 halving. So as we see, here's the halving date, the vertical line, and then the year after the halving, we have toward the end of October, beginning of November, we have the cycle peak. Same thing held true in, I've got it set up here, and we see the December of 2017. The halving was in 2016, 2017 December, the cycle peak, and similarly, the first halving happened in 2012, and the cycle peak was 2013 November. So again, if we look at historical trends, we would think that the cycle peak is going to happen toward the end of this year, October, November. So hang on to your hats, ladies and gents, because things are about to get pretty exciting. We also have Samson Mao, who's suggesting that if the Bitcoin price reaches 100 grand, it's the start of a massive wave of institutional interest. Several factors are setting up the stage for a massive wave of maybe 10 to 20 years of bullish price action for Bitcoin, according to Mao. Bitcoin ascent past 100 grand might have felt like the culmination of a long-promised milestone, but according to industry veterans, what we're witnessing is the beginning of a real institutional adoption, a trend that could fundamentally transform how global capital markets work. Previous Bitcoin bull runs were usually muted because exchanges needed to onboard and were backlogged for months, explains Samson Mao, CEO of Jan3, a company focused on accelerating Bitcoin adoption. But with ETFs, now there's no barrier to TradeFi capital flowing directly into Bitcoin. Speaking from the Consensus 2025 conference in Hong Kong on Wednesday, Mao acknowledged that the torrent of capital hasn't poured in just yet for Bitcoin, with institutional investors such as sovereign wealth funds merely dipping their toes in the muddy waters of crypto and only investing a droplet of what they have. Mao was responding to Adam Back, CEO of Blockstream, who pointed out earlier in the talk how peculiar market dynamics have been at play for Bitcoin. ETF inflows are a multiple of Bitcoin mined every day. MicroStrategy and other companies are buying 2 times plus Bitcoin mining per day, Back said. That's all setting the stage for a massive wave of maybe 10, 20 years of bullish price action for Bitcoin as institutions embrace it, according to Mao. The panel discussed how roughly 1.1 million Bitcoin, worth approximately 110 billion at current prices, has been absorbed by buyers between September and October of 2024, even as prices climbed 50% from 60K to current levels. This unprecedented supply absorption has occurred despite what Mao describes as a manufactured trading range. If you look at the price movement, we kind of peak and then we stay steady and chop sideways, Mao observed. It's good to say it's consolidation, but it looks just very manufactured. There's very high range, there's a very tight range in which we're trading at. It just doesn't look natural at all. Mao's observation was a response on how Back suggested that the previous structured sellers, including bankrupt firms and miners who needed cash during the bear market, largely cleared the market. If we're talking about last year, after DeFi contagion and bankruptcies, there were some structural sellers who were sort of false sellers and miners who were restructuring or replacing fleets or going through a less profitable period, Back said. So bullish. He's basically saying this $100,000 price that we're on the cusp of and have been for some time is a milestone, and he expects that the price is going to move for many years to come higher. And I concur. And previous to this year, most of the money that was coming into Bitcoin was from consumers like you and me. But this time around, it's coming in from institutional investors because of the Bitcoin ETF that started last year on January 10th. Now, companies and even countries can start legitimately putting their money into Bitcoin And that's exactly what they're doing. So again, it's going to start becoming a supply-demand type situation where there's going to be no supply left, and everybody's going to want the Bitcoin, but there's going to be none around, and the price is going to go up. The exact opposite of the stories we talked about earlier, where there were just a few rocks, and then suddenly there were tons of these rocks, and the price turned to nothing. It's the opposite. There's going to be this limited supply of Bitcoin, and there's going to be none left, so the price is going to go up. So hopefully you guys learned some things. I wanted to go over the basics of Bitcoin and the basics in respect of financial literacy. It's important that people know how and why money exists and what happened to historical types of money to avoid doing the same type of thing in the future. And it's not as if you and I have a choice. We do with Bitcoin, but ultimately knowledge is power. So if you know what happened in the past, then you can know how to protect yourself in the future with things like Bitcoin. Please remember, everybody, that money is abundant and money is everywhere. It is time that's scarce. So use your time wisely. Spend less money than you earn. And if you start making more money, start saving more money, not spending more money. And start saving today. Start saving when you're 18 or 20, and you can retire when you're 40 or 45. Additionally, if you have a great idea, start that idea today. Don't wait for tomorrow. Start even if you're not ready. I'm on a path to get myself over 500 subscribers. So I'm going to do it with or without you. But if you find the information I provided helpful, please do share, like, comment, and subscribe on my way to this 500 subscribers. And we will see you on the next stream, folks. Thanks so much for joining.